$2.6 billion. How did you reach that valuation, given that really the only metrics we have are that Global Blue sees revenue at about 450 million euros by 2020, 2021?
Yeah, well, as a financial matter, you can look at comparable companies, one way of looking at it, and we're valuing this business at 12 times forward enterprise value to EBITDA. It's quite a conservative valuation for a business that's growing 8% year to date organically, all organic, 42% margins, highly cash generative. If you compare it to comparable companies, other integrated payments companies like an Edenred, WEX, FleetCor, or the big payments companies, it's a significant discount. But the equally interesting thing for me is just thinking about the strategic possibilities for the business. I mean, you mentioned it, luxury travel, consumer data, the ability for more consumer marketing, just the cross-border payments nature, which is the most lucrative area of payments. I mean, this business is right in a sweet spot for us and for a fintech SPAC like us.
Well, if I'm not mistaken, the last time you were with us, almost 2 years ago at this point when you started this, you had mentioned that you would be able to do something with 10 to 15 billion in enterprise value. This is 2.6. Do we see more acquisitions ahead to grow this firm?
Yeah, it's interesting. When I was here a year and a half ago, I was thinking about it as I was here in the green room. We thought, we went on air and we said, look, we want to do a fintech business, got to have a little bit of growth, structural growth, something we can create value for investors. And then, Vonnie, when you were introducing it, I never imagined we'd have the dream team lined up of Jack Ma, Silver Lake, a premier, maybe the premier technology investor, Dan Loeb, also the CEO of the business, Jacques Stern. To answer your question directly, Sonali, yes, M&A is certainly part of the strategy. But the beauty is the business is growing, so we don't have to do M&A. We can be very opportunistic. Both Jacques and I have run public market M&A plays that have made lots and lots of money for investors and been helpful to our customers. So that will be a part of the strategy, and we think Jacques has positioned the business so that it will be able to do that.
You have some very powerful co-investors here. You have Dan Loeb, you have Alibaba Ant Financial. What do they bring to the table?
Yeah, actually, let me just enumerate them. So it's Ant Financial, $125 million, hugely strategic business, perhaps the most impressive financial technology company in the history of the world, for those who follow it closely. Ant Financial brings tremendous expertise, and also they bring a customer base, that Chinese customer base that's growing and growing and growing, traveling more and more, shopping luxury more and more. Third Point is investing an incremental $100 million. So Third Point already has a significant investment in Farpoint. They're putting in an incremental $100 million, and additional investors are putting in another $125 million. So new investors to Farpoint, some existing investors putting more money up. So when you tally all that up, it's $1 billion investment, a real validation of this business and the deal that we've struck.
This is the second major fintech acquisition we've seen this week. What is Wall Street not getting about technology that is making these up-and-comers really rise so quickly?
Well, I think, look, fintech is hot. We're seeing it everywhere in fintech. It's payments, it's connecting banks in the case of Plaid, it's consumer marketing in the case of Honey selling to PayPal. That's the exact reason why Dan Loeb agreed to partner with me in the first place when we set up this SPAC. I mean, that guy's a pretty smart guy for 3 decades, among the smartest stock pickers in all of Wall Street. And it's precisely because fintech is probably the best area to invest in all of finance right now.
Tom, guy in London, I've seen their kiosks down at Harrods. I've seen them at the airports here in the UK. But as you say, I find fintech is super hot right now. Any resistance from these guys about going public? It hasn't exactly been the greatest year for tech companies going public.
No, not at all. Not at all. So, Silver Lake's been excited about it the entire time. The CEO, Jacques Stern, has been excited about it. Look, part of it is these are public markets people. Jacques ran Edenred for 6 years, 2009, 2015. Tripled the stock price while he was there. Silver Lake has many investments in public companies. They had Sabre for, a decade, SolarWinds now, many others. They viewed being public as quite helpful for a variety of reasons, one of which is to have an additional currency, potentially to do acquisitions, tuck in strategic acquisitions. But no, there really wasn't a resistance to going public whatsoever that I picked up.
So you used a very interesting model here, the SPAC. We've seen SPAC deals at a record. Does it allow companies to go public with more debt? Is that part of this?
No. The market will bear what the market will bear with respect to leverage. In our case, it's quite conservative leverage. I think we're going to be 3.2 or 3.3 times EBITDA, at attractive interest rates near 2%. So no, the SPAC nature of a business doesn't allow for more leverage business. What a SPAC enables is really simple: a known fixed proceed amount at a known price. In our case, it also involved expertise. Me, my partner, David Bonanno, I will be going in as chairman of the business. I certainly have a lot of public markets experience, having overseen 500 IPOs. So that's kind of the benefit of the SPAC. And you're right, there have been a number of SPACs. And the recent SPACs have, by and large, done quite well, particularly the bigger SPACs. So if you saw Dave Cote from Honeywell announce a SPAC that sure seems to be doing quite well. The DraftKings going public was a SPAC also doing well. So, I think you're going to see more, not fewer SPACs because they work.
Tom, I want to ask you, I'm sure you've thought about this. What happens to this kind of business in a time of recession or a time of trade and tariff immigration wars, a time of countries turning inwards, currency not leaving, of global recession, luxury customers just not there in the amounts that they were?
Right, you're asking a great question. So over the long term, this business grows because that's what the beauty of structural growth. There is literally structural growth in this business, whereas other people throw that term around because there are more middle class, wealthy people in emerging markets. They want to travel and spend, and Global Blue is there with a 70% market share. That's the 8% year to date, 10% revenue growth over the last 10 years in terms of CAGR. All of that is really, really favorable. If you look in the recession, the business actually grew through the recession. I think it was up 18% over the worst 2 years. Please don't quote me on the exact figure, but it grew through the recession. What this business has is the revenue can actually trend with exchange rates. So if you're in an emerging market and the value of your currency drops dramatically versus the euro, then you may not choose to go to the Champs-Élysées in that particular summer. So you will see some volatility around revenue tied to interest rates or other macro events, if there's a terrorist attack or something of that nature. But over the long haul, it's a growing business, and that's part of what we really liked about it.
Tom, final quick question from me. When you look at how fintech is regulated on both sides of the Atlantic, the US versus Europe, Europe has a different approach in maybe London and Switzerland, and London's certainly going to get pretty different pretty quickly once Brexit's happened. Is the approach better on my side of the Atlantic or on your side of the Atlantic right now? Because here in London, we're trying to figure it out.
So I've learned to be really diplomatic in my career, having run the New York Stock Exchange, having been involved in setting up credit default swap clearinghouses, in saying on air, I like one regulatory regime over another because I find that always backfires. I will tell you that this business, while regulated and in some cases heavily regulated, that doesn't really negatively impact the business at all. It has a very good relationship with the regulators. The regulations are well known. This business started 40 years ago. So there were no VAT taxes 40 years ago. Sweden implemented a VAT tax. This business popped up to provide this service. Now there's, I think the number is 73 countries with VAT taxes and VAT tax refunds. So it's grown up with the regulatory regime. So it's become second nature. It's not a particular concern.